In 20 years of doing this, I've seen the same 5 financing problems kill deals over and over again. Not different problems every time, the same 5. In almost every case, they were preventable. So I'm going to walk you through all 5 and exactly what you can do as the agent to stop them before they start. Here's why financing deal killers hit differently than other deal problems. You're under contract, you've done the work, the showings, the negotiations, the back and forth, your client is emotionally moved in. And then something surfaces in the financing and the deal falls apart. Inspection issues you can often solve. Title issues have a process. Financing problems tend to come out of nowhere and hit the hardest because by the time they surface, there's often no time to fix them. Here's the thing. Most financing problems are not surprises, they are predictable. And agents who understand what to look for and who work with a lender who flags these things early rarely lose deals to financing. The agents who lose deals to financing are the ones who find out about the problem on day 18 of a 21-day close. Deal killer 1 is undisclosed debt. Your buyer opens up a new credit card, finances furniture, or co-signs a loan after pre-approval. Debt to income ratio then shifts and the approval is pulled or restructured. This happens constantly and it's almost always because nobody told the buyer clearly that they shouldn't do that. Before every accepted offer, your lender should send the buyer a written reminder, no new credit until closing. Deal killer 2 is employment change. Buyer changes jobs or goes from W-2 to self-employed during the transaction. Income documentations change completely. Even a higher paying new job is a problem because most programs require 30 days of pay stubs from the new employer. Sometimes the deal has to restart altogether. Deal killer 3 is large unexplained deposits. Money shows up in the buyer's account and they can't source it. You see, lenders require documentations for deposit above a certain threshold. Gift funds are fine. We just need a gift letter. Cash that can't be traced to a documented source cannot be used for closing. Deal killer 4 is the appraisal gap with no plan. The property appraises below purchase price and nobody discussed what happens next. This is a conversation that should happen before the offer, not after the appraisal comes in. Deal killer 5 is title issues that surface late. Unpaid liens, judgments against the seller, estate complications. These aren't technically financing problems, but they kill closings just as reliably. The earlier title is ordered, the more time to resolve them. Let me tell you about deal killer 2 in action, because it's the one that surprises agents the most. I had a buyer under contract on a $580,000 home. Strong file, pre-approved, everything in order. Day 12 of 21-day close, she calls me excited. She just accepted a new job. Better title, more money, in her mind, great news for the loan. Her start date was 3 days before the scheduled closing. Brand new employer, no pay stubs, no way to verify the new income under our program guidelines. We had to push the closing by 30 days to allow her to start the new job, get her first pay stubs, and give us enough documentation to re-underwrite the file. And the seller had to agree to the extension. They weren't happy about it and nearly killed the deal. The agent on the deal lost a month of their life to an avoidable problem. The fix was one sentence to the buyer at pre-approval. Do not change jobs until after we close. One sentence. The mistakes agents make is treating the pre-approval as if it's a one-time event. It's not. A pre-approval is a snapshot in time. What your buyer does between that snapshot and closing determines whether the closing actually happens. The agents who never lose deals to financing treat the pre-approval as the start of an ongoing communication protocol. Every client gets 3 rules at the start. No new credit, no job changes, no large undocumented deposits. Written in a message so they have it. Your lender should be sending this, but if they're not, you can. So there's 3 things to do this week. Number 1 is ask your lender if they send clients a written list of financing do's and don'ts at pre-approval. If they don't, ask them to start. It takes 5 minutes and prevents most common deal killers. Number 2 is look at your active files right now. Is anyone in a job transition? Anyone who's mentioned buying furniture or car? Raise the flag now while there's time to address it. And 3, I cover all of these in depth in a CE class I run for agents. If you want to get on that invite list, text me. I work with a focused group of agents who want a lender who prevents problems, not one who just reacts to them. If what I described today resonates with situations you've run into, let's talk. Text me at 720-248-6892 or go to teamaronheim.com.